What are capital expenditures and what are revenue expenditures? In this short video, I want to talk to you about a few vocabulary words related to long-term assets. Before we begin, I want to just clarify the difference between an expense and an expenditure. An expense is what we incur to earn revenue, and an expenditure is a disbursement or outflow of cash. For example, governments do not have expenses because they don't earn revenue, although they collect taxes, and they call that tax revenue. Governments do not have income statements like businesses do. So only businesses have expenses, but a business and the government could have expenditures or disbursements of cash. When we disperse cash, we obviously are going to credit cash. But the issue is, what do we debit? We usually either debit an asset or we debit an expense. If we debit an asset, that's called a capital expenditure. If we debit an expense, that's called a revenue expenditure. This is important because if we're debiting an asset, we're going to capitalize that expenditure and record it as an asset and depreciate it later. Whereas if we're just paying an expense, we can put it in an expense account, it goes to the income statement, and from an accounting point of view, we can just forget about it from that point on. Capital expenditures and revenue expenditures, that terminology is not terminology that I use outside of the textbook world. In practice, I use the verbs to capitalize or to expense. To capitalize means to initially record as an asset. This is a very important term that students often disregard. It's more important in cost accounting, because in cost accounting, we're actually building assets and we cannot expense any of the expenditures when we're building something until we actually finish and sell that item. So to capitalize, make a note of it. It's a very good term.